The information provided in this program is of a general nature and is not intended to be personalised financial advice. We encourage you to seek appropriate advice from a qualified professional to suit your individual circumstances. ChatGPT and the chipmaker NVidia are seeing enormous success together, but how much upside opportunity exists for either of them? And Fonterra is having margin troubles. I ask its chief executive what he's going to do about it. It's Monday, the 27th of March, and you're watching Markets with Madison. OpenAI's ChatGPT is all the rage right now. Microsoft co-founder Bill Gates says it's as revolutionary as mobile phones and the internet. In a blog post a few days ago, he said AI can reduce some of the world's worst inequities, such as health, education, and climate change. He also said it's bound to make people feel uneasy, and he understands why, because AI raises hard questions about the workforce, the legal system, privacy, bias, and more. AI, like ChatGPT, is powered by semiconductor chips, and there's one chip maker that makes it all possible: NVidia.
NVIDIA invented accelerated computing to solve problems that normal computers can't. Accelerated computing is not easy.
NVIDIA's share price has seen a meteoric rise, booming at the beginning of the pandemic when its powering of gaming became known. It was caught up in last year's tech sell-off, but has come back already to be up 33,000% since listing. Now, I asked ChatGPT to write an introduction to this interview with Jarden's NVIDIA analyst, and this is what it came up with. Hey there, folks. I know you're all ready for some juicy stock market talk because we've got the inside scoop on ChatGPT and NVIDIA. And who better to chat with than our esteemed equity analyst here to break it all down for us. Now, I know what you're thinking, equity analyst, that sounds like a snooze fest. But trust me, this guy knows his stuff. Hey, Ben, what do you reckon?
Yeah, pretty good.
Esteemed equity analyst, would you call yourself one of those?
Oh, I don't think so.
Well, ChatGPT thinks that you are one, so that's something. When did you jump on this NVIDIA bandwagon? Were you at the beginning of its rise, or have you just jumped on recently?
Yeah, I've been following NVIDIA for a while. So probably, first came onto the radar, maybe mid 2010s through its graphic processing units, which were, in computer running computer games. Since then, they've kind of diversified a lot, and they've got networking and data center applications as well as automotive applications for their software and their hardware. A big part of their shift as well was back in 2006. Originally, they had a program called, they've created a program called CUDA, which stands for Compute Unified Device Architecture, and so that was a computing platform which essentially allowed developers to use NVIDIA's hardware, like GPUs. So before that, it was, and still in general for other developers, it's quite tricky for them to use GPUs. But CUDA makes it very easy. It's kind of like a software platform that allows lots of different developers to use it.
Ben, can you explain just how crucial NVIDIA's processing units are in powering AI like ChatGPT? It effectively runs the whole thing, doesn't it?
Yeah, NVIDIA's hardware is the key infrastructure which large language models, including OpenAI's ChatGPT, are trained on and run on. This is because the performance cost per unit of compute is far more efficient than that of competing offerings from the likes of AMD or Intel or other chip startups.
I want to ask you about the geopolitical risks that a company like NVIDIA may face. Semiconductor chip manufacturers like NVIDIA rely enormously on Taiwan because that's where a lot of these chips are made. How much of a risk do you think it is that NVIDIA's success is so closely tied to the Taiwan semiconductor manufacturing company?
Yep, so NVIDIA has also had their chips or the semiconductors developed by Samsung in the past, and they're known as a swing, basically like a swing customer. They'll move from Taiwan Semiconductor or to Samsung, or basically whoever's going to kind of provide the foundry services at the lowest cost for them and provide them with the fastest chips. There is a tail risk that if the relations between China and Taiwan deteriorate and there is an invasion or the like, that there will be a bit of a supply crunch on NVIDIA. However, all of NVIDIA's formula to create the chips and to make the semiconductor, it's their own IP. And so is the, so is the other parts of their hardware and the other parts of their software offering. So it can be replicated and emulated elsewhere.
So effectively, NVIDIA will never have any competition because it already owns all the IP.
The hardware can be replicated, but the key thing to understanding the way that it's trained is that you need the hardware and the software working in unison. And NVIDIA has created this software platform called CUDA, which is able to only runs on NVIDIA's hardware. And so CUDA lowers the barriers for people to use and train models, artificial intelligence models, deep learning models, etc., and allows a wider audience to kind of use them. They've also done a very good job of evangelizing that product, the CUDA product. And so that's in a lot of universities. That's, the majority of academic papers on artificial intelligence cite and use CUDA. And so in doing that, they've got the majority of users on that platform using that software. Therefore, they're kind of more likely to, they've only really got one option in terms of the hardware to train it on is on NVIDIA hardware.
ChatGPT has really proved NVIDIA's capabilities, but how bullish are you on where AI can go from here? What could be next?
ChatGPT has really kind of shown the public what is possible in terms of AI. And it's a really big step in the next era of computing. NVIDIA is really well positioned in terms of their offering across hardware and software and the uptake. And it seems that for now, they are the preferred partner for a lot of the different model developers, and a lot of the different research houses as well. As more and more consumers begin to pick up AI and learn about it, there's more and more interest in the field growing as well. So people will want to tinker with things themselves. For a while, a big part of the barrier to entry has been that you needed these supercomputers to train models. What's happening now is some of these models are getting smaller and they're moving into domain-specific industries. As they move into the domain-specific industries, the barriers for using and training them are getting lower. NVIDIA also plays in this market through its GPU chips, which are usually targeted at gamers. And so as that begins to happen, more and more developers will start to kind of tweak and play with models and create new forms of offerings to consumers, which will be built on top of these smaller, more domain-specific models.
What other stocks could be in to win from all of this?
Some of the providers which provide the other chips in the data center area are looking like they're also going to benefit. So some of those include Marvel, Broadcom. There's also chip companies which provide peripheral chips, such as analog devices or monolithic power, which are also kind of used on the board which an NVIDIA chip is put on. And then there's also some other kind of peripheral fiber optics players which could also benefit from some of these large training spends and large capital outflows from big cloud players who are building these systems.
I mean, I don't think ChatGPT is coming for my job with the state of this introduction, but could it be coming for other people's roles?
I think so. The mix of employment in professional services in the West is about 50% of the total workforce, depending on how it's measured. So this is the highest level in the history of data available. I expect that by 2030, at least a third of current white-collar jobs could no longer exist in their current form. And so this will be across professional services, which include legal services, consulting services, and other financial-related roles. The net benefit, however, from the technology will largely outweigh the detrimental impacts on the workforce. It's likely that people will move into other roles that will be heavily supported by AI applications, and that'll end up adding a lot more value to the total economic pie. I think that one thing that regulators need to kind of look at and governments need to look at is this transition and how quickly it's going to happen. What are some of the things that they can put into place to educate people on this and kind of make up for any gap in employment that could occur from it?
ChatGPT could make quite a good equity analyst, couldn't it?
I definitely think it could, and it's something I'm kind of worried about.
Thanks so much for your time, Ben. Nice to see you.
Cool, no worries.
Fonterra is returning $800 million to shareholders after spending the past few years selling off major assets, including Tip Top and its China farms. The co-op's numbers suggest it's finally in a better place, with its first half profit jumping 50%. But it now has a new troubled asset, and it's in New Zealand. I sat down with Mr. Fixit, Chief Executive Miles Hurrell, on the day of its result. Miles, thanks so much for joining us. Really
Pleasure.
appreciate it. How are you?
Yeah, well, yeah, it's been an interesting year, a lot going on in the international environment, but to see the team deliver the results they have today, yeah, really pleased.
It's only March, so still plenty more to come, I'm sure. But you've announced that you are going to start returning some capital to shareholders. Why have you landed on that $800 million amount? Where's the money coming from?
Yeah, so we talked about a billion going back a year, maybe a year and a half ago now. We're going to have a good look at our business in Chile and also have a look at our Australian business. And we talked at that time about maybe selling down a share of our Australian business. We've undertaken the review and are really pleased with how Australia is actually performing now and have decided to keep that business. So it sort of took the billion off the table sort of quite early on in that regard. The sale process is really near completion now in Chile. And as a result of that, we've decided we're going to pay down a little bit of debt, but also return a fair chunk of that to our farmer shareholders and unit holders. So that's where the 800 million or circa 50 cents a share come from.
I am going to ask you about other divestments and the ones that you've already made a little bit later on, but first off, your consumer division. It's loss-making currently. What's going on?
Well, loss-making on the back of a couple of things for this first 6 months. The underlying business is doing okay against a record high sort of milk price. But a couple of things have called out for the first half of the year. Our Fonterra brands New Zealand business, our consumer business here in New Zealand, is really struggling. We know about the cost of living crisis that everyone's sort of talking about here in New Zealand, and we're seeing that play out. We just haven't been able to get the margins that we've historically expected in this New Zealand market. So that's a big chunk of it. It's about $90 million impairment that we wrote off for the first 6 months. The second part of that is 3 brands throughout Asia, in particular 2 brands in Asia, Anlin and Anmum. So we're seeing both interest rates, growth rates in Southeast Asia in particular, have an impact on this sort of the forward-looking growth trajectory for those brands. So again, we've written down about 70 million on those brands as well. So they're the 2 big underlying issues with our consumer business. When you peel those away, our consumer business is doing okay. Certain markets are doing better than others, but you'd expect that in a business like ours.
In New Zealand, I know this is quite a granular question, but exactly on your margins, just how much have they fallen in your NZ Food Brands division?
Yeah, we don't disclose that. We don't disclose.
Tangibly, how bad is it?
It was not as good as what we'd like it to be, clearly, because we've made an impairment. And so, work to do. But again, we've got different channels. We've got, whether it be retail, whether it be food service outlets, whether it be the trucks driving around delivering milk to service stations and the like. So we've got quite a varied business in New Zealand. And some of those will have better margins than others. But overall, not good enough. And hence the reason we've had to write down that business.
So what are you going to do about it? Can you not just drop the price of cheese?
Well, to get a better margin, you'd actually increase the price of cheese, would you not?
But no one's buying it, so that's clearly a problem, isn't it?
No, it's not actually. Our shares are actually doing okay. Our market shares are actually not too bad. It's just that we just can't get the margins, and the business is quite small in comparison to our global business. So we've just got a bit of work to do, look at better efficiencies, scale efficiencies, not doing as well as it could. So just, I guess, work to do in that area, and this is a bit of a shake-up for it.
Can you afford to put more into that business, though, to increase margins, to the costs surrounding that in terms of brand marketing and that sort of thing?
Yeah, we can, because again, you have good years, bad years, good months, bad months, good markets, bad markets, and some of these other businesses are going very well, and so they'll step up and support our New Zealand business at a time when they're struggling. Just like New Zealand did when you go back 3 years, actually 2 or 3 years ago. Our Fonterra brands New Zealand business actually did very well at a time where someone like Sri Lanka really struggled. So that's how we operate in this business. Business units will help each other in times of need.
Now, the analyst at Jarden, Ari Decker, has come out with a quick report this morning saying that with what's going on with your consumer division, if there is ongoing impairments, it begs the question as to why you're continuing to hold on to it. Would you look to divest your consumer division or any brands within it?
I mean, it's not a conversation that we're having right now. I mean, let's see if we can fix it first. It's an interesting insight from Ari. He always got an interesting view as we expect. But I think what we're seeing here is there's work for us to do. But we don't hold on to things for the sake of it. If we need to do something about it over time, well, we would. And we made decisions in the past. I think you and I had a conversation a few years ago around Tip Top. It was a tough decision at the time, but we made the call because we knew it was the right thing to do. If we have to sell down parts of New Zealand in time, or rationalise, or expand and increase AMP to make it go faster and harder, well, we'll do that. But it's early days.
You're right, you've sold a lot. We've spoken about it over a number of years. Tip Top a long time ago, Ciprole in Chile most recently. What is left? What do you have left to sell, or is that everything that was on the table?
There's 2 parts to it. So in 2018, when I was fortunate enough to be given this role, we needed a reset. We needed to do things differently, and we knew when you talked about that. So China Farms was a big one. We had our Bean Mate business in China also. We needed to do things with them. We went about Tip Top. but the reset was really clear. We finished the reset last year. So we're not in a reset phase now. But good leadership is actually looking at your portfolio at any given time. What assets do you bring in? What assets do you take off the balance sheet at any given time? And so this is an ongoing process. So I wouldn't call it a reset. We're well and truly beyond that. And actually we're investing in companies at this stage.
How would you describe where Fonterra is now compared to when you started in 2018?
Yeah, night and day is probably an easy description. But in saying that, the core of the cooperative hasn't changed. We're 150 years, 151 or 2 years old now as a cooperative, and the core hasn't changed. We're here for our farmer owners, we're here for our cooperative members, and that's always been here. And the heart and soul of our people that exist, I mean, they're passionate about getting out of bed every day, doing the right thing for our farmer owners and doing the right thing for New Zealand. That hasn't changed. When I flippantly say night and day, I mean, the balance sheet back in 2018 was really under stress. We had a portfolio of businesses that we've talked about that was far and wide and was losing focus on what our core was. And so when I say night and day, we're now focused on New Zealand milk, we're focused on being a leader in sustainability, and then this new growth engine for us is around innovation and science, and that's the area that's getting a lot of focus now.
You mentioned sustainability. You had protesters outside your building today. What did you make of that? They were calling you flood terror, saying that you should be held responsible for these enormous weather events that we've had in the country. Do you take any responsibility?
I mean, look, we're accepting of people protesting and having fun and doing their own thing, and that's entirely up to them.
Having fun? Were they having fun, or were they?
I mean, I didn't talk to them, so I can't comment. But I mean, it's entirely up to them to protest. Well, we know as an industry we've got to do more. Fonterra is the leader when it comes to our carbon footprint on a global basis when it comes to agriculture and in fact dairy. But we know we've got to do more in the space, which is why we've committed to $1 billion of investment in the space. We've announced a joint venture with the government to really look at things like methane. So we acknowledge that we've got a bit of work to do. But no, really proud of how we're stepping up and doing that. But we're open to people coming out and expressing their views. I guess that's good.
We've spoken about margins in the business, and we've also spoken about things like sustainability. When you go home from your workday, where do you stack those things up in terms of priority? Do margins supersede something like sustainability?
Oh no! I mean, the role of a leader is to look at all of that, and not to mention go home and spend some time with the family where appropriate. How do you look at all of that? How do you look at risk? How do you look at the global tensions that are out there, the geopolitical situation? How do you look at health and safety, the well-being of your people? And so to say that sustainability is higher on the list than margins, and margins are higher on the list than people's well-being, I mean, you can't look at it like that. You've just got to take a holistic view, the results hopefully speak for themselves that we are starting to do that in a more cohesive way.
Thanks so much for your time, Miles. Nice to see you.
Pleasure.
More company results are due out this week, including Synlait Milk and New Zealand King Salmon. You can get all the news and numbers as they land on nzherald.co.nz. And I want to know what you've been asking ChatGPT and what it said. Screenshots are most welcome. Now go put your money to work.
Thanks for checking out our YouTube channel. To stay up to date with all the latest news from the New Zealand Herald, click the subscribe button below or check out one of the videos here, and head over to nzherald.co.nz for more details on these stories and more.